Welcome back. If you are feeling financially threatened by the coronavirus and are considering tapping into your 401k, you are not alone. On this Finance Friday, certified financial planner and president of Shakiba Capital, Trevor Shakiba is sharing financial tips to consider before making any decisions. Trevor, it's great to see you there in your home office. And just break this down for us, because last week on Friday, when you mentioned this, I think this was the first time a lot of us were hearing that we might be able to draw from our 401ks without a penalty. So how does this all work, and is it a good idea?
Yeah, so it's interesting because that was the first time, like you mentioned, anyone had heard of it, because there's so much new information and about, stimulus checks and small business loans. And so I got a lot of questions, and frankly, there's a lot of misinformation out there. The first thing you got to know is that it's by provider or your employer. So it's not just automatic to everyone. So you have to check there. But the facts are this: if you're under 59 and a half, you now have the option, if it's available to you, to take a distribution from your 401k or retirement plan and avoid the 10% penalty. It's a big deal. Doesn't mean taxes have gone away, so you would still owe that. You can get the money back in to the 401k in 3 years and not have to pay those taxes. And if you can't get it back in, the good news is that you can pay those taxes over a 3-year period. So it's a lot of info, and it's good to know.
Okay, interesting. So if you do take that distribution, I just want to be sure that I'm understanding. The taxes could be spread over 3 years if you choose not to pay it back. But as long as you pay it back within 3 years, you're not penalized.
No penalty and no taxes, as long as you get those funds back in there within that 3-year period.
At the end of 3 years. Okay. So another thing to consider, though, if you were taking a withdrawal or a distribution from your 401k right now, isn't that the equivalent of selling when things are low? I mean, isn't it never really a good idea to sell at the bottom?
Yeah, that's a great point. And that's what I want to talk about, is because, look, the market's come back some, but we're still down 20 or 25% from where we were in February. So when you sell, you're essentially locking in that price point and realizing those losses. And so just because you can do it doesn't mean you should. And look, even if you sell and you're able to get the money back in, remember, the market in 12 months or 18 months could get back to where it was. We can't predict that. It could be a short time frame, or it might take longer. So just because it's available doesn't mean it's a good thing. And remember, this is your nest egg, so you don't want to tap it if you don't have to.
Yeah, and if and when, Trevor, as you mentioned, 12 months from now, 18 months from now, when the markets finally do rise and recover, you're missing out, or you would be if you had taken a withdrawal. You'd be missing out on all that potential for growth during that time, right?
Exactly. So that's very similar to if you were to take a loan. When you take that money, it is now out of those investments. So it's no longer experiencing, in theory, the growth, the appreciation, the dividends that you would have seen. So you want to leave that money alone. We'll talk about it here in a second. If you absolutely have to, I'm going to give some examples, but if you don't, make sure that you don't touch it just because you can.
Well, and also, I know a lot of people are in some very, very tight financial situations right now, but if your 401k is supposed to be your retirement plan, does this mean that a lot of people might have to rethink those retirement goals, or potentially down the road even work a little bit longer to reach what they would need for retirement?
Yeah, exactly. No one's talking about this, but I wanted to make sure to bring this up. Remember, if you take a $25,000, $50,000, $100,000 distribution, that will dramatically affect those financial goals, in particular retirement. So you need to think through that, run the numbers, make sure you analyze that, because then you may not be able to achieve retirement at 60 like you were planning. And you may need to know that you're going to have to work longer if you take that distribution and you don't get that money back in.
We're going to get to some examples in just a second, but quickly, we should underscore that this is a last resort, right? In the meantime, we should be calling our credit card companies, calling, our mortgage companies, and trying to work out a deal with them before tapping into these funds.
Yeah, exactly. That's kind of how I'm explaining this to a lot of people. Case-by-case basis, last resort, communicate. We talked about this a lot over the last couple of weeks. Make sure whoever you owe money to, mortgage or car, let them know. Most companies are willing to work with folks in a variety of ways. And obviously, right now, a lot of people have received those stimulus funds. Use that wisely. Look at cutting expenses. Don't forget about refinancing too. Rates are very low for your house or your car. There's a lot of different things to tackle first before you get to the 401k or retirement plan.
And Trevor, very quickly, we're over time here, but what example would you give for a reason to tap into your 401k?
Yeah, so I definitely wanted to bring this last point up because some people are going to need to do that. But look, if you have a housing problem as far as you don't want to get late on rent or risk eviction, and then basic needs, right? So my main point here is that if you need to use it, but only use what is absolutely necessary when it's absolutely necessary. If you need 10,000, don't take 50,000 out just to get ahead. It will not work out well for retirement or any of the things that we just talked about.
All right, Trevor, thank you as always for your fantastic advice on this Finance Friday. And in the meantime, if you would like to connect with Trevor, you can visit ShakibaCapital.com.